Good morning. Good morning to some of you guys who are just waking up. It's almost midnight. It's 11:17, August 30th, Sunday. We're gonna start another fresh week. Let's go right to the disclaimer. Investing and trading in the financial markets impose substantial risk to where one can lose all or more than their initial investment. The content provided by myself are for educational purposes only. All ideas and forecasts mentioned within are simply my opinions and not investment or trading advice. Trade at your own risk. Alright. Those who wish me well over the summer, thanks. Much thanks. Very appreciated. And as promised, as soon as I'm back home, which I'm here, we're gonna get this video together. This one specifically is just gonna be for the spools and probably the other indexes, but most importantly, we follow the spools. Spools give us direction for the others. It may seem that other indexes are leading or lagging, but for the most part, when the S&P 500 is trading in bullish setups, the rest shall follow, and vice versa for bearish setups. Right now, my opinion of these indexes are we're trading into support. Is nothing more than a pullback until proven otherwise. Alright, I really wanted to start this video after the markets opened up the Globex session, which it has. Reason being is because there are a lot of options of what can happen during the week. So I used the Globex session starting on the Sunday evening to, hopefully it'll at least, give us more specific options or at least less options. Nothing really much has happened in the session. A little gap down, but we're still trading within the realms of Friday session. Still as I take it as a balancing session. Alright, but for the most part, yes, this is after the fact, and guys who have known me know me. I am well before the fact, before things happen. I'm the one who usually take I guess the contrarian opinion, and only because I know, or you can say I really understand how these charts are moving, and in contrast to a lot of other people's bullshit. Alright, my opinion, all you need is a chart. Don't care who it comes from. It could be from TD Ameritrade, it can be from Ninja, it can be from IGQ feed, CGQ, it could be from Sierra. It doesn't matter. Preparedness, being prepared will lead to profits. You don't need the best feed, you don't need all the fancy tools, you don't need none of that. If you're committed to learning, to at least being open-minded, not having, you can have an opinion, but at least not letting it be the gasoline to fuel your trades, and from there everything should be fine. If you're willing to be accountable to your own actions, and if you can manage risk. Alright, that's what this is all about. And you're talking to somebody who went from trading, messing up in options and stocks and I guess the ETFs. From there I went to trading one lots on a euro on the M6E contract. One lot to two lots, and I guess I got introduced into how to read a chart. Computers, again, these algorithms. This is what is running this market, and you have to be able to ride the coattails of them. Because if you don't have billions, if you're not printing on this chart, you're just following along. You're just going with the flow. So your opinions on where this market will go, should not go, it's gonna leave you broke one day. And so just gotta play along. Alright, so with that said, March, April, I really got very, very bearish this market, only because this market had went into 7-year profit targets. You can see this on this chart right here, courtesy of Thinkorswim. Alright, the 7-year profit target was derived from these double tops. Before the breakout, we broke out and just had a straight rip up right? We broke out of this 1586.75s, and this first pullback, which happened last year, October, excuse me, not last year, but the year before, year prior, if I'm not mistaken. Correct, it was this candle. All right, we had went from these 1586.75s up to these 2014 halves. All right, see if I can get it. 2014 halves. It's gonna be in the ballpark again. Just understand those are the numbers. If you hear me saying the numbers, those are the correct numbers to be drawing from, snapping from, whatever kind of other word you want to use. But from 1586.75, I'm gonna be about 1586.75 to the 2014 halves. All right, that pullback, that was very quick. We actually didn't go all the way to the halfway back, or 50% retracement. And that profit target, if you can see it, it was, if it was snapped correctly, it was the 2115 half or something to that nature. All right, this is what, for the whole pretty much year, from January on, you can say even from December, all right, we've been banging our head up against this area. This is why this area was so important. You know, we undershot it, we overshot it, doesn't matter. All right, but for the most part, this was the 7-year profit target, and that's where it was derived from, that level that we snapped from. All right, so let's get rid of this. All right, we know that. Okay, let's get rid of this. That's mine. All right, so now we know what levels are important by looking from the past. All right, in order to know where you're going, you must know where you came from. All right, from these 2134s, all right, excuse me, let's just go back a little bit. All right, from these 1586.75 to these 2014 halves, again one more time. All right, now if you snapped all the way from these 1586 to all-time highs of 2134s, all right, we're gonna be just about, which it worked out, 2134. This is how I got this level, this 1860. And although we went to 1831, this is what I felt was true support. And when we got going, we just went. So this is why you need to be prepared. And believe me, I got frustrated enough. Stopped out, couple dollars stopped out, couple dollars stopped out, whatever it was. Alright, I just know I kept getting frustrated, and this is what this choppiness is supposed to do. It's supposed to frustrate you, because when it wants to go, it will go. So luckily this July, alright, I was pretty happy with my entry. I got right in at these 19 halves. I just got short. And I slapped up a stop right above, and within a month and some change, we was rewarded. All right, and to target, I was getting out at the 1860s. I wasn't trying to be greedy. I didn't grab nothing below it, but I had taken profit. I remember it was the day right before it, or the day of. No, it was the day before, and closed out the full position on this 1860 hit. And that was pretty much it. Being prepared, knowing where to get out. Why did I want to get out here? Because this was support. We were likely to get a reaction off of it. And the way we had slammed down, alright, this showed some serious aggressive power, in my opinion, from all of this price action. And I'm pretty sure it's not over. But that's an opinion. Alright, so I'm going to teach you how to respect the level. Alright, so this is a very important level. This 1860 quarter, alright, down onto these 1796s, 1795, 66. Let's just call it 1795. You print below 1795, this trend is in trouble. This upward trend is in trouble. Alright. It was one thing to say, you know, we needed a pullback. This is that pullback. This pullback, if it's bullish, it should be buyable. it should be buyable, and it will lead to new highs up at the 2263s. All right, but that's in the future. All right, where do we go from here? Well, we got to measure commitment. One of this long. You have to respect this long below because it did trade. It traded, and so far it bounced. However, how do we measure commitment on the short? From the 2134s to lows. Alright, now before we get into that, which I'm going to erase this right now. Alright, we was also looking at one other level, and that was from this doji, this hammer low, as an extension, meaning that if this market wanted to still continue to tank, in the 15-minute setups you'll see this a lot better, but pretty much this was the candle that was being drawn from the extensions all the way down. This is how we knew that. I believe it was another one. It was like probably from here to here. Once this had broke, it was a warning to just, you shouldn't be trading short. At least for the moment, it was just like a wait and see mode, right? It was like a warning shot. So once the extension broke, all right, this is when the full halfway back from all-time highs, the 2134s, to the 1831s are now in play. All right, we traded this Thursday, Friday, I believe this is today. All right, Sunday, the Globex session, which Sunday through Monday, this should be running. All right, so again, this was why I was getting short. Alright, I shorted 81.75s, and it went slightly above, and I'm willing to add only in this in this upward portion of this trade, pretty much from the 18s all the way down to about the 2000s. I'll look at, or I'll be interested in adding, but however, pretty much I just shorted this level. It was actually 3 ticks below this. This is it's 4 ticks because I got 81.75s. Alright, so pretty much a point below this I was shorting. Alright, so I'm already short 81.75s. I also tried another trade. It was on I believe Thursday. I tried all arounds. It was once the spools broke. We'll have to see that in a 15-minute time frame. We'll be quick with this. And I believe it was I forgot where it was. Okay, there you go. Bang. That was there, and broke. See, now seeing this in hindsight, I should have not have shorted it earlier, but things happen. I probably was drawing from a different level. Alright, anyways, what you want to be paying attention to coming into this week. Alright, these above the 18 halves, 2018 halves, 2018.75s really, a print below, above that. Alright, you really shouldn't be short. And let's go back into the daily, you really see everything. You should not be short above this 18.75s. Do not fight something. Alright, you can't create the event. The event has to, you have to be a participant and not the creator. Because trying to be the creator, you're gonna another way to end up broke fast. Alright, so above these 2019s, this short is broken. And yes, we do have targets up at the 2263s. However, if we do break, this is why I want to go to a 15-minute. Alright, from these 31s to highs, I would be very suspicious of the long below 1892. Below 1892, I will be very suspicious. Alright, yes, it didn't hold up. You know, you can say from this 1831s, this trade higher, you see how it didn't hold. Then again, from this almost double bottom, you can say, which you would say that's a double bottom only because support did trade again. Alright, but breaking, no trades. It's like to say that in order for a trend to be healthy, You want to see active participants. You want to be able to see that it'll go halfway back and hold. Maybe a 2-tick front run, and then it'll go to target. Another pullback into target. Another pullback. So on and so forth. When you start seeing that, see how this breaks, that's sloppy, right? Somebody like me, I'm sticking my stop a tick or two under that. I'm getting stopped out, but yet it still goes to target. But then there's no other pullback from there. The pullback is it's like a 4 or 5 point, 30-point front run. All right, so that's untradeable. So when I see that happen, then I'm looking at the other side as this as just being a squeeze to get shorts out of their positions, and now the short is trading with good parameters, or you can say decent parameters, right? To as far as risk to reward, right? So you're risking how much here now? 30 points. You're risking 30 points to make, geesh, do the math. All right, so this is when I see something not trading or something hard to get into, that's telling me that's not the right trade. So just as before, this is one of the reasons being before with this area, when both longs and shorts was breaking, something was wrong with that picture, and it was, you had to take a step back, look at the bigger picture. What is happening? We're bouncing off a target. All right, shorts, longs, shorts not having what do you call it, follow through, longs still failing, and just sloppy. All right, so there's something happening here. It's just, are you patient enough to find out what's really happening? And eventually now we trade it into support number 1. All right, so this is telling you something as well right here within this price action, reading chart reading. All right, you don't have longs here. This is just a squeeze. In my opinion, this is just a squeeze. There's no way to draw that. Alright, yeah, you can say that this is a double bottom, and then you would use this low, this 1850, as an anchor. But then yet again, so far you didn't even get a trade off of it. So far. Alright, so come Monday, if we do trade this 1921 and bounce and go to target and break this 61.8, this 2018 half level, yeah, I would say, you know what, shorts are not in play, and bulls have control. But right now, in my opinion, this is still a short. This market has the potential on going very lower. Alright, this is getting ahead of ourselves, but let's get rid of these. Alright, this is pretty much how you even get rid of this, so you don't even see this. Matter of fact, we'll leave it. If we break through the 1795s, the next target is 1759, so it's 1760. Alright, right now this short is trading almost perfectly on a Friday, and we're gapping down potentially to be a pro gap and go on a Monday. Alright, so mind you, we do have the potential to trade through this and start heading lower. Breaking below the 1796s will put this bull market in severe jeopardy. Alright, one thing I want to say, and this is getting very far ahead, I want to remind you, this is a upper level, high level setup that leads to higher prices. When we break below, I'm going to say this again, we break below the 1795.66, if it opens up the door to go all the way halfway back historically. Alright, look for your historical low. What I found on this profit, this historical low is $4.60. Alright, so it sounds very scary, but you know what? That will be a buying opportunity that I will jump at. Palms open. I will be buying this. Alright, so I just wanted to show you what this implicates. From $4.60 to all-time highs. And we're gonna edit this so you can see exactly that this was correct. $4.60 to all-time highs if we was to come halfway back. Alright, you see this? 1069 with a line in the sand at 818. That's a long ways down. Don't think it can't happen. Do not think it cannot happen. And in my opinion, this will be a buying opportunity. This is one that, with my age, if we got down here, I would just buy it. I would be an idiot and just buy it. But again, this is very in the future. If it breaks below 818, there is no support below, and you would just be waiting for the short to break. So this would be a devastation. I don't want to imagine what this would be to many people. Alright, but this is again in the future. We're nowhere near that. But just look how quick we went from 2134 to 1860. Excuse me, 1831. Alright. Sell in May and go away. I wish I went away, because I was in front of the computer May and June, and nothing happens when you want it to happen. But when the ball gets rolling, it happens very quick. Alright, so pretty much that's really all I have for you on S&P. And again, above the 2019s, we can make our way to new all-time highs. And below the 1795s, this bull market is in jeopardy. Where right now we were on the edge of the cliff. Now we jumped, and what's next? Right? That's how quick it was. And then my goals, my objective is pretty much done. I'm just whatever happens mode. And that's the way I'm just taking it, because otherwise I'll be pulling my hair out with what's left of it. Alright, with the ES conquered, let's just go through the other indexes real quick, because a lot of people just don't like the spools. Me neither, but the spools I have to look at all the time. Alright, the NASDAQ. The NASDAQ as well, if I'm not mistaken, and a halfway back. From the 4686s to the 3901s, halfway back as well. Next target below, 3715. Follow the S&P. S&P will guide you, because the other indexes can be sloppy and break and still be in shorts. This is why you have to follow the S&P. What I usually would do, I would get short on the spools, and once the spools break, like they'll be trading into their short, the entry era, which the spools are doing now, 1982. But once it breaks, like basically what I mean by that is, see if this would go and click for me. There you go. Once it would break this setup, then I'll start looking for short entries in the NASDAQ, the Russell. I really do like the Russell, because people just, if they're either blindly buying, they're just dumping so emotionally. And I'm telling you, the Russell can go 60 ticks in seconds, and it's amazing. Yeah, but the NASDAQ, as I was saying, again in the halfway back, with targets below. And it's amazing how quickly the motions of the market change, and it's crazy. Alright, again, targets below 3715. Let's go to the Russell. Russell didn't quite make it up to its halfway back, which is quite interesting. It may be in its own, I guess, its unique setup, which honestly I really don't see it here. It can be in measured moves, but it didn't trade that all the way down. I know from here to here it did. It started trading its own measured move, and it was quite crazy. I wasn't able to get in the Russell. I had to I had the worst setups on the Russell sometimes. This was like a few times I had good setups. That was a good measured move there, and then from there just started plummeting down. Jeez, unbelievable. Then broke. Alright, so pretty much the Russell is not in its greatest spot to get short at, but again, I would follow the S&P for direction. Another way it could be, just guessing. It's just why I don't like to do that, which, yeah, it is. Almost perfectly. It's trading a short. It's very interesting. Dow, I believe, is trading a halfway back, just like the S&P. No, it's not. Sheesh. It's very funny. It's not a traditional setup. And although it looks like it's trading, I'm not going to draw things that may look like it's there. And this is how you get into trouble. You know, you try to create things that are not really there. Me personally, I'm only going to draw from this high to low. And I would consider this not trading yet, or that's a huge front run. Yeah, that's a 100+ point front run. Definitely not. So just be careful. I would really don't force things. Let things just come to you. Have these levels written down and just go from there. One thing I want to show you that I found interesting. You know, everybody was saying the financials are leading. You know, lately. It's a daily chart, mind you. Let's go to a weekly. If you get a monthly at that. Alright. Let's just show you. Remember the financial were leading, and they sure was, and getting hammered. Right. Be careful around this area only because it already had showing that it's trading, that this is valid, and mind you, this is from 2007 highs to lows. Came very close to the 618. Check out tech. Right? And somebody tells you these fibs don't work, just say, yeah, okay, no problem. You know, and just laugh at them. This is showing some nastiness coming. It's very amazing. I want to jump somewhere else too. Let's go to gold. I know people talking about gold. Again, this is why I told you not to, if you're gonna invest in gold, I really suggest you stick with physical gold, silver, anything that's physical. And stay away from these future contracts, from anything that you're really speculating on and you don't own it. I would really suggest you not to do that. Mind you, this is from setup from this year, showing that it was still working. You know, from this high to this low, people were shorting that. It's 1224. This is why I said you need to really get above this 1244. If you don't, just stay away from it, and it would save you all of this going to target, Alright, down to these 1101s, came even lower. Alright, so now possibly being that it went to target, this is your next line in the sand. These 1218s. Otherwise, gold has the potential, of which I am trading it on the long side right now, and it's only to get up into this 1190, and probably I won't even wait for 1190s. Alright, I got in right at these 1117s. Alright, I was watching it. Again, this is why you could just watch and wait for things. It's not much, don't get me wrong, but I already took off a couple dollars on Friday, and I'm not doing anything else with it. Stop right below, and that's it. It's a riskless trade. I'm not even thinking about it, and right to target. Alright, if I can get the rest off at these 1193s, if it looks like it'll go there, I'll take it. If not, it's to dump it right into that area, because this long is very opposed. It's opposed. You witnessed it. It's not something until it breaks above this 1218. I would stay away from it, because again, now the next target for the short is down at the 1016, and this major long, I look at this as a big trade, right? Next target for gold, if it does not trade below 945, is well above 2200. Alright, almost $2,300. That's $400 over all-time highs, close to it. So again, this is something big is brewing. I hope people do see it. Let's get out of this gold. We're not going to talk about oil. I'll save oil for another time. There was one I really didn't want to go to. I forgot. Oh, the dollar, of course, the dollar. I love talking about the dollar. Alright, just to show you, just to remind you, because nothing really has happened. This chart. Just look at it, because although it may, I don't know the time frame, I don't know why, I don't know for what. However, I just know what this chart is showing. It's showing dollar weakness, showing that if the dollar cannot get above 102.10, its next target is well below all-time lows, 59.19. Guys, trade safe. Peace.